All right. Good day, everyone. Thanks for joining us. We've got a very special guest with us today. My name is Jason Lee, and I'm the incoming chairman of NAILBA for 2021, I guess chair-elect. With me today is Salene Hitchcock-Gear, who's the president of Prudential Individual Life Insurance. And Salene has been in the business for 30 years. She authorized me to say that, believe it or not, 30 years. 20 years of experience leading different businesses and executive roles. She's a proud Michigan Wolverine, which also means I've confirmed that she's a Tom Brady fan, which is very important to me. We're really pleased to have Salene here with us today to talk about both current state, future state, her perspective as the leader of Prudential's life insurance business here in the U.S. So without further ado, Salene, welcome to the show, if you will, for today. And let's get after it.
Great to be here with you, Jason. And I would just make one correction in your introduction. I am a proud but wounded Wolverine this year, so it's all good.
No big game, though. No big game.
No big. That's right. That's right.
So let's start off, Salene, with just the current environment and thinking about some of the challenges, obviously, this year with the pandemic, low interest, unbelievably low interest rates and persistently low interest rates. And the kind of impact that's had on our business, both from a manufacturer, maybe distribution perspective, and what Pru's response has been.
Yeah, thanks so much. And I really appreciate the opportunity to spend a little time with you today. So, as we're rounding the corner, all I can say is this is one year I think a lot of us are going to be glad to kind of put in the rear view. But, like most big challenges, we're earning our stripes and we're trying to adopt as many of the new things that have been put in front of us that have been working as possible, because one of the things that you always find in the crisis is you find a few nuggets or silver linings that you can move forward. So one of the things that we've had to do specifically within this pandemic year is really move toward more electronic usage of some tools that we have already had in play. And I know a lot of your members here have probably seen the same for many carriers. That's one of the places where we know it's going to be really important to stay the course for a number of reasons. But, not just is it more efficient in times when you can't be face to face, but it's helpful from a time perspective. And it gives clients, I think, a little more confidence in how things can move forward more easily. The second really big thing, though, that I'm sure all of your folks watching this understand is, our product shifts have been enormous. And I think that's across a lot of different aspects. One is, early on in the year, we had to make a lot of swift changes in our underwriting protocol. So along with the electronic tool usage came a lot of barriers. People couldn't get to the doctor. You couldn't get exams. A lot of things had to be adjusted. So, as risk managers, we also have to make sure on the back end of that, we're able to take in the right kind of business. So a lot of, you saw a lot of different rules get put in place to really try to accommodate how we could best serve customers. So, as we think about the overall experience, it's been one, trying to respond as best as we could to make things accessible and easy, but then to also be very realistic about what this current rate environment means and how do we keep both guarantees and value in our products. And that's just meant, being quick to market with new updates and making sure that we could do both things, right? Make sure we could help customers, but also keep a financial lens on how we needed to perform.
One of the things as a BGA that I've heard throughout the past, I guess, 6 to 9 months is, we've seen, the limitations on products in terms of, premium caps and pricing changes. And the question keeps coming up as we get deeper into this, how does a life insurance company price either a capital intensive product like long duration term insurance or even just a straight guaranteed life insurance product? The underlying question is, are we going to have a product to sell? And, from a salesperson's perspective, that's a scary question, but what are your thoughts on that?
Yeah, listen, no question. So let me first start by saying this, because, this is really important. We have in America today the largest gap in life insurance coverage that we have ever had, right? It's 12 trillion and growing by some 300 billion a year. That is enormous. And so our responsibility in this industry is to make sure we can meet that challenge. This, you think about COVID, this is not the time to pull back from making sure we can insure Americans, but it is the time to make sure that we do that not just responsibly, to shareholders or to, our policy holders or to the financial mechanics, but to make sure that policies perform. And so you're exactly right. This is a very tricky environment. And so one of the challenges we're all going to have is how do we really stand up guarantees? So what I think you're going to see is a lot more cash value type products, products where customers and companies share a little more of the experience so that those guarantees can actually work.
Right.
There's no magic. When you get to low rates, which is the backstop for, everything that we put in place, you have to make adjustments, but that's around benefits and features and how things work, not about our commitment to have products out there that actually get after what is just an enormous need. As we think about what's coming ahead, we are all looking forward now to the vaccine and news that this pandemic will shift. But I'll tell you what, I would not be surprised if over the rest of our lifetimes, we don't see some additional challenges like this. So we have to be ready and really make sure that we just continue to work on how we can be viable for all sides of this question.
Just circling back to one other quick thing you said before we move on around the shift to digital. What have you guys seen this year already happen? Have you seen any movement there in terms of more uptake of the digital platforms? And on the other side, have you seen maybe some, not necessarily just efficiency gains, but quicker throughput, things like that?
Oh, yeah. So great question. Of course, I have to do my commercial. So Prudential has had what we call Pru Fast Track now for a couple of years. And we've been rolling this out in a way where, we've put it forward to say, here are all the elements. Please get started. But I will tell you, it is a complete end-to-end experience where you can submit your business online, have an electronic interview all the way through to underwriting and then through, policy delivery. The good news is because those tools are out there and available, yes, we are seeing more. We're up to some 70% nearly of the e-interview process, which means you're not waiting on a phone call. You're not playing phone tag with people. A customer can sign on into a web environment and take care of that at their own leisure, right? Without the pressure point of what sometimes happens in the tele world. The other part is, so that's a big leap. So 70% from about 30, say last year. The other big experience is on e-delivery. We're almost at 90%. I think it's 86 right now, almost at 90% where maybe that was about 40 or 50. So, like anything, when you have things available, the biggest thing in our industry is getting people to use it. So in this year, we're actually seeing good uptake there. What we have to do, though, is work on the middle section. And so, the e-interview is great, but e-submission actually means you can get into the faster underwriting process. If you don't submit it electronically, you can't. We're going to try to work on that a little bit differently as well. And we know a lot of people have choices out there. They might not want to do it that way because they're, getting other quotes, but it is such a benefit. The real benefit is on the placement side. We get about a 70% placement rate when you go through this electronic process because there's no lag. It's significant. You got an offer out there to a customer. You tighten that time frame up and everybody moves forward. So there are real benefits to using these electronic tools. And again, as a carrier amongst many, I'm sure some of these things are a little bit more difficult when you say, well, that means I might have to get into 5 different environments. I think some of that is true. We're going to have to probably work together to make sure some of your front ends and access to the things that we can make available to you work best in your environment. But this is a no turn back moment, right? I think we all have to understand that these are better ways to do things, not just for carriers, but for individual advisors from a time perspective. And the customer experience is just, you got real room for improvement, both in time and, less invasive items in terms of how they can plan around what comes in the process.
Yeah, so let's pivot, Salene, to a different topic, an important topic, probably the biggest issue that our country's been facing alongside the pandemic is the issue of racial justice. You and I were talking in preparing for this call and how Prudential's looking at this issue. And it's not only is it central, but it's sort of critical to the future success and, of our democracy, our country, of everything that we are. What are your thoughts there?
Yeah, that is a really important subject right now. And there are a couple things that I think really stand out. One is in this particular moment, financial services in general, but certainly the insurance industry, can speak up and can do more. And it comes in a variety of places. So, one of the things that we know for sure is most of our companies are looking for business growth, business opportunities. And this is a community that really hasn't been served well by our industry. And if you think about new approaches and ways that we can, put just a new conversation in our organizations, we're going to find that there is a really strong leaning toward life insurance in the Black community. There is definitely a need. And there is a growing demographic in that population that really speaks to the capabilities and the usage for the products that we offer. That is a great partnership mindset if you think about how can we better serve the community and what are the business opportunities there. So at Prudential, we have a couple of things that we are working on. One is the company overall put forward 9 significant commitments toward racial equity, and it spans from everything about how we treat our internal associates to how we think about consumers in the marketplace and how we lend our voice. We all have pretty large government affairs organizations, and we can do a lot to lend voice to better policies that can impact the community in a more positive way. The other thing, though, is to get very focused in our distribution environment and in our business environments to pair growth and trying to expand our reach into the marketplace with what's going on today. So that's everything from, being conscious of having, educational opportunities. A lot of our advisors, promote seminars and do other things, but are we reaching diverse communities? What are we doing in our recruiting lanes? Are we bringing people into this business that can help, a broader community get access to the products and services we have to offer that's so important for building generational wealth? The backstop for us in financial services has to be that we think long and hard about what you're going to frame up in many economic terms as a racial wealth gap. There is an enormous disparity between white families and Black American families, and there is something we can help do there. And, I always think when you see these big problems, it can get overwhelming. But if you figure out what you can do, and in our industry, what we can do, we can make a huge difference. And, the business opportunities around it match up very, very well. So, from our perspective, it's important to have a voice, obviously speak up, share in the current dialogue, but then to also put pen to paper and really think about the positive impact that we can bring if we just turn up our efforts, think a little differently, and then put specific goals in place. So you'll see, as Prudential moves forward, we're penning what we're calling a Black Consumer Initiative to be renamed with something more significant. But we're going to spend some time in the Atlanta area, in the Detroit metro area, and in the Newark area where our home base is for Prudential to better reach the Black community there and bring more products, services, messages, education, an entire suite of things to those communities, really in an effort to see what works and then see what we can do on a more national basis and then move that into more diverse communities as well. So it's the idea that we bring our entire value proposition and kind of a surround sound in those markets. Many of our companies do good things. We have a foundation, we have social impact investing. If we bring all that to bear, along with our business presence, we're going to be able to do a lot more than we're currently doing today. So stay tuned for more around that. But I'm really glad you asked the question because it is going to be a big focus for us going forward. And very important, again, from a business growth standpoint, as we think about the demographics in our country and how we're going to have to think differently about growing our business.
Yeah, I couldn't agree more. I think, even as you step back just from the racial justice component of that, just the relevancy in general of our products in the minds of the consumer is, you could argue it might be at an all-time low pre-COVID, certainly a little uptick.
That's right.
Because of COVID, but I think the nice part about that is that it represents a tremendous growth opportunity. And I think that's a great segue to our final question, which is, as you look ahead, low interest rates, possibly more pandemics down the road, the type of social unrest that we've seen, a changing administration. Do I need to add anything more?
No, please don't. Please don't. Well, you can add we're missing the big game this year. Okay, that's a downer too, but certainly doesn't line up with all those big things.
But yeah, absolutely. I mean, I think though that what it does paint for us is a pretty stark picture of where we need to go as an industry.
Yeah.
So what are your thoughts there? What do you see as some really key items or changes as an industry that we need to make to address these challenges on a go forward basis?
So I want to first start by saying, I am actually more than a glass half full person. I'm an optimist by nature, but with experience. So I'm not thinking that everything is easy. But what I see in this current environment as an extraordinary opportunity for us to lead. Right, leadership in our industry is not something that we've ever shied away from, but right now and more than ever, we're really going to have to step up. And one of the things that we are working on in particular are ways that we can better reach and address the mass market in America. Our advisors serve so many people in so many great ways, but I have to tell you, when you peel all that back and you think about where we started with this $12 trillion gap, it is largely because we aren't talking to enough people. That's just a function these days of the fact that we don't have nearly as many advisors as we used to. So we're going to have to really pivot into new market, opportunities, and that includes using digital in different ways and trying to talk to people where they are. And so one of the things that you might have recalled over the course of the last year is Prudential actually acquired a firm out in the Seattle area called Assurance, and they're basically a digital distribution opportunity for us, as well as the online support. They have 1099 type agents who are on the phone. They do a lot of different things with a lot of different products, PNC, Medicare. They reach people that we traditionally don't reach today, and so we're standing up some very simple solutions in their environment, again, to help reach this broader segment. And in a lot of cases, these are people that advisors just don't talk to. Some of it's because these folks don't think they can afford an advisor. Other is our advisors have, full plates, I guess is what I'd say, and their market base may not reach everyone. So I think we have to, as an industry, keep an open mind around how we, think about the broader lens and not just those people who I would call the buying public for insurance. If you watch LIMRA statistics, what you typically see is a very slow growth environment. So over the last few years, you'll see a 0, a 1, a 2, maybe even a negative. And then you'll look at the company rankings and you'll see wide variances of who did what. But we're not really growing, right? We're trading within our team. We've got to really start to grow the marketplace. And so that's the forward look. That's the opportunity. That's the how do we do more? How do we reach more people? It's how do we design products that, to your point earlier, make what we do more relevant. I think we always know, rising tide lifts all boats. This is not a zero-sum game. It's about creating more opportunities for all of us. And that's being more inclusive of a broader group of people who just may not be talking to us today or thinking about this. So I'm extremely optimistic. And I also think in this low rate environment where we're going to be pushed to is that kind of innovation. We're not going to be able to just stay where we are and in our comfort zones of how our products work and, how successful we've been. You think about so many of our companies 100 plus years old. Well, that didn't happen overnight. It happened because we're pretty good at what we do. And in times of change, you've got to get outside of your comfort zone and really push, into new ways of thinking. So I'm really optimistic that what is right now a very difficult period will put us into spaces that we wouldn't have gone before in a very positive way.
Just one last question you made me think of is just your audience here fundamentally is brokerage. What do you see for brokerage and what do you want to see from brokerage to help Prudential achieve those types of objectives you just talked about, reaching a broader audience? What do we need to do to be the most successful distribution channel?
Yeah, I love that question. And here's what comes top of mind. For all of you who are out there and you are successful, somebody helped you along the way, whether you had a strong mentor, somebody pulled you in, somebody spent time with you. I'd say, the career in financial services is fairly obtuse for those who don't have someone to guide them. Most of what your businesses are going to require in terms of growth probably are going to require another hand or two. Think hard about who you bring in around you to help you do some of the things that we just talked about, which is to get a little more creative about where your opportunities might be. And I think extending yourselves and thinking maybe a little differently about what's next for you. Do you have a succession plan? Do you have people around you who are going to be able to help you grow and develop your business in a different way? I always feel like, again, these things can get so big, but individually we can do so much. And I will tell you, I did let you say I'm 30 plus years in this, a little more than 30. I've worked with advisors the entire time in my career. And most of the time, this is hard to do. Most of the time you are so busy, so focused on, what's in front of you. It is hard to think a little bit bigger, but I will tell you the most successful people I've ever worked with, and I know a lot of you are out there, write your business plans down, have coaches and people around you who help put those plans in place. Push yourselves a little bit more in 2021 and beyond to think about bigger community impact, more people you can reach, new ways to use digital so that you are more effective. For those of us who now have been working from home, it's a bit of a luxury. A lot of people have to get out every day. But when you're doing that, your productivity is going to increase. If you stick with that thinking and give yourselves more time to go find more people to talk to by getting your operational side, more efficient and working with your folks to do it differently, I just think the opportunities are just going to increase. So, we have real skills, we have real abilities. These are great careers. Put new goals out there for yourselves. I think, we are so responsible for helping people understand insurance and what it can do. We need to do it more.
Yeah, I couldn't agree with you more. We are the industry that protects families and businesses. So I think it's a great way to end. Salene, I want to thank you for your time today. I also want to thank Prudential for their support of NAILBA over a very long period of time. Many of us listening and watching today have had long-lived, healthy, vibrant relationships with Prudential. It's been a great ride up to this point. A little bumpy this year,
Yeah.
but for all of us, but really looking forward to the future. And thanks very much.
Well, I appreciate the opportunity. I just want to say thank everybody for their patience as we have made a lot of changes this year. And, we're always trying to do what we can to make change easy. And we will continue to do that and have a real focus on making sure you stay with us along the journey. So thanks again, Jason. Great to spend time with you today.
Good to see you, Salene.